Hello and welcome to the Spark Accounting Solution Show. I'm Jenny Q, your host, and I'm joined by Julie Babcock Hyde, CPA, CFM, QuickBooks Pro Advisor, Profit First Professional, and the owner of Spark Accounting Solutions. Hi, Julie.
Hello. I am happy to be here and talk about some interesting things going on with employee compensation and hiring and other things going on right now.
Absolutely. It's an interesting time in our world right now for employers who are looking to not only hire, but retain quality employees. So I'm excited that we're talking about this. Do you want to just kick us off with number one?
Let's go ahead and kick off.
Okay.
Number one, I'm sure you've seen the signs around, whether you're at the airport or whether you're at the McDonald's or whether you're at the department store, people are offering sign-on bonuses.
Yep.
And so this is definitely a way that you can compensate employees and help lure them in your direction. But there's a couple of things that you really want to make sure you think through as you structure this, and also things to be aware of when you go to process and actually pay out those sign-on bonus. And so I think, historically the sign-on bonus has typically been paid up front, and then if people leave, they take it back. But one of the things we're seeing right now is people are saying you have to stay with us for 3 or 6 months or some number of months before we're going to pay you this sign-on bonus, because we not only want to get them to join our team, but we want them to stay on our team. So as you're figuring out what that sign-on bonus might be to help attract people to your business, you need to think through how long do you want them to stay before you give them the money. And then the last thing you really want to make sure you're thinking through is when you go to pay them, you need to know that these type of bonuses are typically treated as supplemental wages for payroll tax processing.
Wait, I love the quote, supplemental wages.
Supplemental
What
wages.
does that mean?
That's just what the IRS calls them in their
Okay.
guides. Nobody else calls them supplemental wages. We call them, it's a bonus.
It's a bonus.
But so supplemental wages is the IRS terminology, and those are typically subject to a special withholding rate. Because if you run them through like regular payroll, like if your employee gets paid weekly and you add their bonus on there, all of a sudden they're going to have a whole bunch of money withheld from their check because they think that they're going to get paid that weekly from now on. So run these separately so that you get the right withholding, and make sure you check that this is supplemental pay. Now, one other thing to think about with this, unrelated to the new employee, is how do you manage this with your existing employees that are staying with you?
Because I hadn't even thought about that.
Yeah, because all of a sudden you're paying people. I saw a restaurant that was offering, it was either $2,500, somewhere between $2,500 and $3,000 sign-on bonus. And so how do you reward your existing employees for staying? And so you have to really think through this, because you need to keep those folks motivated to stay as well. And one of the ways that you can do that is our next tip, which is looking at paying your existing employees a referral bonus for bringing in a new employee. If you like your employees and you want more of them, what better way to get people in that, number one, your current employees actually want to work with and get along with, than paying them a referral bonus for bringing in new employees. So this is a way. Yeah.
So I have a question. If I were an employee,
Yes.
right, and I have been loyal through the entire pandemic, right?
Yes.
And suddenly brand new people coming in are getting a sign-on bonus. And then for me to get a bonus, I have to refer someone, right? I might start looking somewhere else to get a sign-on bonus somewhere else. Could an employer also give a supplemental income? Is it supplemental income?
Supplemental wages, yeah.
Supplemental wages, just as a thank you for your diligent service.
Absolutely. You can absolutely give bonuses to your employees for anything. And if it's hey, you've stuck with us through all of this, thank you. here's some extra money. Yes, we're always able to bonus our employees.
Okay.
But this is one way is through referral bonuses, and then we have performance bonuses. We have all kinds of different bonuses that we
Okay.
can give to our existing employees. This particular one is just an extra one that you can do that hopefully might help you attract employees and reward your existing team members.
I like it too, but when you were started talking, I was like, wait, I put myself in
Yeah.
the position of an employee who had been diligent, and I'm like, now I've got to perform again to get,
Yeah.
anyway. Okay. Thank
Well,
you for
and
that clarification.
no, and you know what? There's a lot of kind of bad feelings right now between like for existing employees and new employees because they see employers really like doing whatever they have to do to attract these new people, and you want to make sure you don't forget your existing team and all of this. If you're bringing new people in at $5 an hour more than your existing team and they find out about it,
Yeah.
you're going to have a problem there too. So you really need to um think through the whole thing. It's tricky because you can't you know unless you're raising prices at the same time, and we're not talking about price increases today, but you might need to as
Yeah.
you're working through this process to make sure that everybody's still getting compensated fairly. Everybody still wants to stay and work for you. New people want to come work for you because it's a tricky time.
It is a tricky,
It's a
tricky
tricky
time.
time. It is
Yep.
a tricky time.
Okay. Thank you for
Okay.
clarifying that.
Yes, no problem. Okay, let's head on to number 3.
Okay.
Now,
Let's do it.
number 3 is looking at offering some of the traditional benefits that you would think about offering. If somebody's making a choice between a job with no health insurance and health insurance, they might be more apt to pick the job with the health insurance. But health insurance, dental insurance, vision insurance, group term life insurance, all of these things that are kind of in a traditional benefits package. You might want to look at those, but you also should be aware that there are other ways that you can do these things as well. Maybe you're not at a point where you can offer full health insurance. That doesn't mean that you can't offer dental and vision. Just so that there's something. You may be able to offer a taxable health stipend where you give people money to go towards their health care, but they can spend it for anything they want. It just adds on to their wages. It's not a true health insurance benefit.
Right.
It's just an addition on their wages with the intention of, hey, I want to help you with this. Same thing, short-term disability, group term life. These are all policies that you can add on that may be, appreciated by your employees and may not cost as much as you think they do. When you look at some of the, vision, dental, even some companies even add telehealth. When you look at those options, those might end up being affordable for you, for your full-time employees, and you may be able to add it as an option for your part-time employees to pay for themselves. So look at it. The traditional benefits are out there, and people, some people want it, some people don't. And you have to know kind of your demographic and your employees to know if that's something that they would value or not.
Awesome. Okay. I love it. I love it. What's next?
Perfect. The next thing, once we get like the traditional health insurance, life insurance benefits, now we're going to talk about retirement benefits. Okay, these are things that you can add on. Now, most people, when they think of retirement, the first place they go is probably 401k.
Right.
And for a lot of small businesses, when you start looking at the administrative costs of a 401k, it's too expensive. So the next step down is usually the simple IRA. Now, even with the simple IRA, there's still employer match required. You still have to get contributions remitted. There is still a cost to the employer. So if you're not quite ready for either of those, there's one level down that I like to
Okay.
make sure people know about, and that is just a payroll deduction IRA. This is not an employer sponsored plan. This is just like your employee is putting money into their IRA, and you're just facilitating it through a payroll deduction.
So it legitimately Well, there has to be some cost for the administration of setting it up, but as far as matching funds, that's not there.
Yeah. There's no matching.
Mhm.
The truly the administrative cost is literally just the time associated with setting it up in your payroll system
Okay.
and sending the money in to the IRA
Sure.
custodian. Now, not everybody qualifies um, to make Roth IRA contributions. Not everybody qualifies for deductible IRA contributions. Everybody can do a non-deductible IRA contribution. Um, but let's be honest,
Okay, let's
it's a
do.
it's a heck of a lot easier to put $25 a week via payroll deduction into an IRA as an
Yep.
employee and
Yep.
have it taken care of for you, never see the money, than to actually have to go through and write that check yourself, especially if
Totally.
you're waiting till the end of the year. And all of a
Right.
sudden you're trying to write a $500 check, a $5,000 check, whatever it is. Um, it's a lot more painful when you have to let go of that money out of your own hands than have your employer manage that for you. So it's just another option that you can offer so people at least feel like they've got an opportunity to save for retirement through their paycheck. Um, but some people will be looking for match. So
Sure.
so
Yeah.
that's when you start looking at the simple IRA or you start looking at the 401k.
Okay.
Okay. So
Who I do have another question for you.
yeah.
Anyone listening to this may also have the question. Uh, who is the person that helps you set those up?
Usually you're going to be looking for a financial advisor
Okay.
that's doing that. You know what? You can go online and you can Google, payroll deduction IRA, and there's places online that'll help you set it up. But if
Okay.
you have a local financial advisor, they usually can help you set that up as well.
All right. Handy,
Yeah.
handy people, those financial advisors.
Yes.
Okay.
Yes, sir.
Okay. And now we have several options under other creative ways. What's going on with that? Other creative ways to compensate your employees.
Well, let's start with ones that puts cash in their pockets. It
Okay.
is not going to run through payroll. Everything we've talked about so far is kind of payroll or benefits. But one of the things that you can do, if you've got employees, a lot of our clients have employees who use their cell phones for business. And so a lot of companies are just expecting them to use their cell phones and not necessarily giving them any money for it. But you can provide a cell phone allowance. It's tax deductible to you, tax free to your employees. And it's another way that you can get, whether it's 40 bucks a month, 60 bucks a month, some kind of reasonable thing to compensate them for the use of their personal cell phone. That's an option that's out there to get money out there. Another thing people sometimes overlook is reimbursements for expenses that employees have paid for out of pocket. The biggest one is often mileage. So if you're not paying your employees mileage reimbursements, again, it's a deduction for you in the business. It's non-taxable for the employee, provided they fill out an expense report with their mileage on it, with the information that's required by the IRS to get reimbursed. You can reimburse your employees for expenses if they submit an expense report with the receipts associated with it.
Great.
It has to be what they call an accountable plan. And an accountable plan means that your employees are doing an expense report and submitting receipts. If you're just giving them a car allowance, that's going to be taxable.
Oh, okay.
That's an important clarification.
Okay.
Cell phones are different with that. You can give them a cell phone allowance and it's not going to be taxable. But most of the other expenses, if you're like giving a meals allowance or a hotel's allowance or,
Mhm.
they need to have an expense report that justifies and supports the expenses that they're getting reimbursed for them to be non-taxable. Um, Other things that doesn't involve cash is, how do you make your place a fun place to work? Start looking at culture. Start looking
Yes.
at, how do we make this a fun place to work? Are we rewarding success? Are we telling our employees thank you? Are we, hey, you did a great job. Hey, this customer just called and said that they love you. Good work. Are we doing these just little things that make employees like to come to work and like to work at our business? Then What about company events? When you have the summer picnic, when you have the holiday parties, those are 100% deductible. So don't hesitate to do those, to let your employees know that you appreciate them. And just really think through, what other ways can you make things fun? Can you do contests? Can you do what other things can you do to make things fun to work there, so that people look forward to coming and working for your company? There's more than just financial rewards. There's emotional rewards of, feeling like you're part of a
Oh,
fun.
yeah.
Well,
Well, countless studies have been done that the main reason that people will leave a job is because they don't feel appreciated. So, yeah,
yeah, yeah. So, like, truthfully, like saying thank you, sending out cards, so it doesn't cost anything or hardly anything to
right.
send out a card to your employees to their home and just say, we really appreciate you.
What about adding like a $10 gift card for Starbucks or whatever?
Technically, if you are giving out gift cards like that, they are supposed to get added to the W-2,
Okay, that's what
because
I was wondering. Okay.
it's a cash equivalent. But if you sent
Okay.
everybody out a little care package, or sent everybody out a new mug with your logo on it,
Yeah.
those little kind of care packages that get delivered to their house, and they're like, why am I getting a gift? Oh, it's
Yeah,
from
I
my
love it.
boss.
I
Um,
love it.
just a little way to say thank you and really encourage people to, um, have good feelings about where they work.
I love it. I love it. Very good. Okay, so if we have someone watching or listening to the replay and they have a question, what's the best way to reach out to you?
The easiest way to reach out to us is really, if you're watching this on Facebook, to hit our contact us button. If you are watching us on YouTube, if you will, either head over to our Facebook page or head over to our website, sparkaccountingsolutions.com.
Perfect. Okay. And as always, you have the 5 core chapters, the important ones, available for free download at bit.ly/sparkpfbook. And it's at the bottom of the screen right now, and it will also be in the comments. So feel free to grab that for even more small business tips.
Yes,
Let's make money. Go team, make money. That's what you always say, right?
that is what I always say.
Okay, perfect. All right. Thank you so much for watching. Thank you, Julie, for your time today and your expertise.
Thank you.